Hello folks, I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened today and what does it tell us about tomorrow. I do a show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. It was a wet day today, all day long. Something moving in. It's that time of the year. So, talk about moving in. They're moving in some new stocks into the Dow. So I see here. Let me get back to that page. I was looking at it when I came on. So we're gonna boot out Bank of America. Who else was it? No, I can't find it now. It was Bank of America. I think it was even Alcoa. And, oh, here it is. Alcoa, Bank of America, and I think Hewlett-Packard they're going to kick out. And Hewlett-Packard got brought in not all that long ago, if I remember right. But what's interesting to me, and the reason I bring this up, is that one of the things I talked about in the latest book I wrote was the problems associated with going back and looking at prior data. And when you look at prior data, you have all these indexes that are constantly moving around in terms of what they're made up of, right? What's in them. One common thing that happens is companies get taken over, so they have to, they go away, and you got to replace them. You got to put something else in. Another common thing is delistings. A company gets too cheap. They're not going to let it stay in there anymore. They take it out, right? There's minimum listing requirements on any of them. With something like the Dow, it's just it's a choice. They decide to take some out and put some in. Now, if you look at the indexes and if you look at a chart and you think about what you're seeing in that chart, over a very long period of time, what you see is not what you think you see. And what I mean by that is these indexes, if you look at a long chart of the Dow, and I'm going to bring up a chart here that I can pull back for the Dow back to a long time ago, right? So I'm going to bring this one back and I'm going to flip it up to let's put the industrials up, because this particular chart will go back very far, all data. And if you look at this, it's just a nice long progression all the way higher, right? Of course, you had the 29 crash, but outside of that, baby, for the most part, it's just a progression higher. It just looks like all you do is go higher and higher and higher. Well, yeah, kind of, but inflation's part of that, right? And the other piece of that is delistings. You take stuff out and stick better stuff in. And so what are they going to do? They're going to take out the 3 dogs in the Dow, and they're going to stick 3 more in that will be better representative, supposedly, of what the Dow is supposed to represent, which is industrial stocks. Now, industrial is a much broader concept now than it was when this thing was created, because if you look at what they're putting in Goldman Sachs, Visa, and Nike. Now Nike, I guess, is kind of that, but I mean Nike, yeah, I mean they make shoes, right, and other things, but I don't know what Visa makes that's industrial, and I certainly don't know what Goldman Sachs makes that's industrial. So this whole concept of an industrial, Dow Jones Industrial, really doesn't represent it anymore. And the other thing that's interesting about it is you all of a sudden get a nice little boost. You put in better stocks than the ones you take out. Well, as those better stocks continue to do better, the Dow Jones is going to do better. And that is what's happened over the years. So when you look at one of these charts and somebody says, oh, this thing's just going up and up and up, right? It always goes up. Well, yeah, kind of, right? Kind of. Not exactly what you think. It's like anything else. When you dig in, it looks a little bit dirtier than you thought when you first got in there. Devil's always in the details. As far as the market, let's take a look at what happened today. If we go over to the quotes, we had the Dow Jones up 128 points, 15,191. The S&P's tacked on 12 and a quarter, 1684. Composite 22, almost 23 higher, 37.29. The NDX was 15 higher, 31.85. Apple was struggling, and that kind of brought the NDX back in as Apple did its new product unveiling, and I don't know how much new was there. It was just a bunch of plastic from what I could see. The Russell up 9.5, almost a percent higher, 1055.72, going right after its tops. Last week, I mentioned this a couple times, we turned down on a day that we should have went up. I don't know if we should have went up. We certainly should have gone down the next day, and we didn't. That was a clue this market was telling us something. And as you can see, this market is telling us something. Swing point high, takes it out today. I actually took it out yesterday. Gets over it and gets into the bar down and gets over it as well and goes to close the gap. 1684.83. Close 1684.09. It will close that gap in the morning. Gets over both the resistance points. The bar of measurement was this bar. That's the last big one, and it's also doing a retest, regenerate off of this low. The top of that, guys, 1683.73. We close at 1683.99, over it. Volume 36.9, going over 30. Blow it away. Market wants to go higher, folks. Now, the last thing that's here is the retest, regen of this one. 1691 is the number on that guy. If you go back and you look at your high over here at 1696, that's what the target is now. It's going to run right up there. Try to get into that one. Now, I expected some sort of a pause as we came up into this area, and we didn't get much of a pause. As you can see, we went out on the highs, volume expanding as we went. That, if you go over to weekly, you've got that high over there on the weekly. Remember, this was a retest regen on this weekly bar. That high, 1687. That's going to be attacked tomorrow. The weekly, you're going to try to close out over that bar. That's going to tell you for certain that you're going to new highs. I guess nothing's for certain, but that's definitely going to tell you you're going for new highs, and that's probably going to be the last vestiges of any kind of a retrace. Retrace top to bottom, you got almost 4.5% out of this baby, I think. I didn't do the numbers before I came on. I believe that's what the numbers were. Came into an area, supported it, tried to break it down, couldn't, flips it around, they're going back, try to take out the other side now. If we look at the let's see here, let's go to the Dow. I mean, the Dow, I'm not sure what to say about the Dow, but the Dow got a nice day up. It's been underperforming. Maybe it's the anticipation of what's coming into it. Dow's going to try to make it to the top of this bar, 15,332. Let's go to the strong stuff. How about the NDX? NDX was the one that gave us the leadership 2 days back. On Monday, it popped over it right at the beginning of the day. Held. Once it did, started to work higher. Continues to work higher. Volume expanding slightly as it goes up. You do a doji today at the top. I suspect this thing's getting pretty extended. This is an extended move at this point. You get an over-under. You can expect some sort of a sideways to down day to follow. That's what I'd be looking for as a clue. IXIC, the broad composite, also is broken out. Again, these things have all broken out multiple swing points. That usually gives you 2 to 3 bars on the upside. You got bar 2 today. I expect this thing will try to give you bar 3 tomorrow. Tops, closes at the highs. This one, it's not quite a doji, but it's pretty darn close. And I expect that one's going to try to extend a little bit more tomorrow. The last one is the Russell, and the Russell is charging right back up to meet everybody else. Gets over its swing point high yesterday, going over another one tomorrow, or at least it's going to try. 1054.76, 1055. I actually did it today. Is that right? 1054.76. Yeah, did it. It's over it. Volume's there. So you got another swing point high that turns this bullish. Now you just got one left at the top, and there's no volume up there. I expect it's going to go right after it. So big push up. Everybody's getting drugged higher by the strong indexes. The only thing that's a negative at this point is what came out of Apple today. Apple had its show, really didn't show much in the way of new. Actually, this one didn't get updated yet because I had to massage it a little bit. So we'll go back and use a different one. Let me go back over to the this chart. and we can pull it up there. Here we go. So Apple, big volume, right? Comes down on big volume into this one. Now, the volume here is heavier. And here you have 31.4. You're coming back into it with 26.5. You can see you're not breaking it down, but you're hitting it with good volume. That tells me you're going to do more testing of this downside. You got a swing point low sitting there. I wouldn't be surprised to see it get down into the bottom of this bar as time progresses here. As soon as we get some weakness elsewhere in this market, I expect this one is going to show us some extended weakness on the way down and push us down into towards the bottom of this bar more than likely. So that's Apple. So Apple, the point of showing this is Apple's probably not going to add, it's going to take away from the index. NDX, you know, if you do a comparison chart, and we can do one here real quick. So if I put up the NDX itself, and if I take and pull in, let's first get rid of these drawings, and then let's take and do a comparison on the SPX. Here we go. You can see the outperformance of the NDX as compared to the SPX. SPX about 2.5% over this 3-month period. NDX about 6.5%. Expect that to close back up just like you've seen before. I don't know that it's going to get all the way back to even as it was, but I expect it to close and narrow. If you're looking for a spread trade, that's one place you could look. And you know, those things are good to look at. And you know, there's potential trades in them. Okay, so that's the NDX. If we go back over and take a look at the sectors, let's do that because I haven't looked at most of these things tonight. A little busy today. It was a bit hectic around here today. So the IYT transports, this one had strength all day long, and it's pushing with volume. It got into the big bar. Remember, the big bar was here. That was the one we thought it might give us some trouble. Forget that. Opened into it and therefore just gained strength all day long. Right up into resistance. Looks like it's about, what is that top? 117.96. It's over it. So your resistance zone is going to disappear on you tonight. There's not going to be one. The only resistance now is the top of the anchor. Going to head for it. Another swing point high, and you're seeing them break. That was 2 swing point highs broke on this one. Here you broke a swing point high. Here you broke another one today. This is the semis. They're going after the last high now. They will go after it as well. So you can see the progression right across the sectors. We saw it coming the last couple of days. Here's the XLB breaking out of all of them. Over the tops. Going to try to extend now. When you get a breakout over multiple swing points, and if you get it over multiple time frames, then you really get something, right? In this case, you're getting it on one time frame, but you're getting multiple swing points, which will give you 2 to 3 bars on that time frame. Today was bar 2 on this time frame. So as you can see, all of these are doing exactly what they should do. XLE tried to pop over, didn't get over it today. Closed right at it, 8396. This was the weakest one all day, 8384. It's going to try to break it tomorrow, and that would be multiple swing points as well. XLF, let's see what this one's doing. So on the XLF, we've got over a swing point. Lordy, lordy, can you believe that? Well, yeah, because when one starts going, the others start falling. You get a couple of them, pretty soon you got a deluge. XLF over 1 is now this one, you know, remember this had been the lead sector. It's a lag now, and that doesn't mean it can't lead again, but right now it's not. XLI, this one broke over everything today. This one did multiple swing points as well. Did one yesterday, does another one today, actually does 2 more today. That will be bar 1 of 2 to 3 bars. XLK, not as strong as the rest, but going after the highs. Got over this one. It's going after the last one and should try to get it tomorrow. Volume's heavier. XLP, now these are the 2 weakest ones, XLP, XLU. This one still can't get anything going, probably won't, because interest rates are trying to creep up still. XLU, got a little bit more juice out of it, but not that much. These aren't going to do much for you. I wouldn't be worrying about them right now, because the strength is in the sectors and in the indexes, and those things that are weak are going to just get drug higher. When it's time to short, those would be the places to look. XLV got a decent spike up, nothing special. It's up into resistance, and it's got a little volume coming into it. So it looks like to me it's going to try to get back to that high before it's done, 51.50. Got a swing point here. The next one, there will be a resistance zone there tomorrow, and it's going to try to hit that guy tomorrow. XLY. Yep, another swing point taken out yesterday. Doesn't look as strong. So the two strongest sectors prior, two of these strongest sectors was XLY, discretionary, and the financials. Both of those are lagging now, but now you've got others stepping up and taking their place. You've got early economic type stuff. I mean, you got materials, you've got industrials, you've got, I mean, these are the things that lead when you're just starting a new economic, cycle. You're coming out of recession. I mean, we're quote unquote 5 years into a bull market, or I guess 4.5, and we're getting these guys leading. I mean, is this like really the start coming out of a recession, a turn? Maybe it is. That's certainly what people are seeming to bet here in terms of what they're moving into. Okay, so tomorrow's Wednesday. It's hump day in front of options expiration, I believe. Options expiration next week. Usually that hump day you can get a turn, and so I wouldn't be surprised, you don't see it in the charts, but I wouldn't be surprised tomorrow to see a little weakness come into the market. A little bit of sanity come in, pause a little bit. Some of the stronger sectors will still push a little bit more. It'll be day 3. You'll get a new high on the other sectors. On the indexes, because they've already pushed and they're sitting at the high. So maybe you get your new highs there, which is day 3, and you get a little retrace off of that. But folks, these markets still look like they want to go higher to me. Let's go look at the OX markets and see what we got over there. Okay, so let's start with our bonds. The bonds are trying to break to the lows again, and they got under this bar, less volume. That's another ABCD down. Okay, you're A.10668. Your B point 102.53. So that's $4. And your C point is going to be here. That gets you down to 99. I got to bring a monthly chart over to find 99. Okay, so here's the monthly. I don't even see 99. I don't see any 99s. The best move is the 97. So if this thing does start to carry, I don't see anything to stop it until you get to 98.56 to the low, which is 97.35. That's your last zone down here, and right now it looks like it's going to try to go after it. Okay, so bonds, if this breaks, folks, if these lows break and if volume expands and you actually get that ABCD down, I mean, you're starting it tonight, but it's suspect. So suspect bearish, ABCD down. If it gets under the lows, breaks those guys, that's a swing point low, and starts to escalate, you're going to see some breaks on the market, because this market is expecting this to stabilize. I'm expecting this to stabilize, but so far you can't find enough buyers to do that. So that is a potential worry wart. Okay, let's go over and look at the dollar. Now with the Syrian situation not so much on the hot seat anymore, the dollar is finding it a difficult struggle to just stay up here, and it's still stuck at resistance. Let me look at the FXE, and it's still stuck at resistance, and we're really not seeing any kind of expansion in volume. So that's a toss-up. That doesn't really tell me anything. Let's look at the gold market. That one got hit today. So GLD got slammed down. Oh, look what it did though. Look at this. So you get under the low, 131.80. Remember I was talking about coming back in here to test these again. Well, it didn't take it long, one day. I think I mentioned it last night. So you're into the bar though on the gold. So the low here, 131.80. It closed under it. 131.74. And it's into this bar. This can carry. It can carry on down here and do the retest regen on the highs. Now that, one bar doesn't make a trend here, but you've got the potential for a little small ABCD down. Let's do that measurement. A point here, 136.79. The low is 131. So that's about $5 off of 34.40. That gets you to 129.60, and that's into that bar. So you could get your retest regen going on a full ABCD down if this thing breaks. The way it closed today makes me think you're going to get a little bounce first and then potentially try to break it. That's the way this thing is set up. Let's see if silver looks the same. Yeah, pretty much the same, almost exactly the same. Okay, so I got quite a few questions piling up over here. I don't see anything else I really want to talk about on the aux boards. If we go back to the market, I've given you my opinions there. We've been thinking it's going higher. It is going higher. It's breaking swing points. This thing's not done yet, so don't get too excited about trying to short anything if that's what you're doing. Let's see what we got over here. BAC, now that we're kicking it out of the Dow, where's it going to go? Well, I don't know. That's a good question. Let's see what it looks like, and let's throw in these other ones while I'm here and see what they look like. So, STSA, CLG, Celgene, and what's the last one? EEM. All right, let's see what these look like. So let's start with BAC. So Bank of America, this thing has been beleaguered for a long time. And, okay, so something's wrong with these quotes here. I have to fix those. So Bank of America, 1469, 1475. Got to 1469. It's doing 9.2 into. Yeah, it's going to hit it again. Well, just like everything else, if Bank of America can clear this 1475, it's going to go to the high. So then the question is, what does it do after that? And if we look at it from that perspective, it's still hanging here at the highs. I don't know. This thing looks like it's going to go higher to me. 1485. Yeah, I mean, I believe if you get over these two swing point highs, which is possible, quite possible, by the end of this week, then you go after the highs. And you're going to have a swing point high print up here on the weekly, which means if you break those, then you can even go higher. So yeah, Bank of America looks okay. I don't see anything wrong with it. Celgene, let's see what that one looks like. Alright, Celgene. So on this one, what do we have? Going after the highs. So it gets them today, 149.92. We close at 14874. You did 1.9 into 2.4. That's a failure. Yeah, that's a failure. It's gonna pull back slightly and consolidate and then go after it again. It'll probably pull back in this 144 area. If you're looking to get in, try to be patient until it comes back into that bar. That's your July 26 bar. Okay, the next one is STSA. Let's see what that one looks like. So STSA is Sterling Financial, kind of a thin stock. Well, it got over the highs and blew some volume. That must have been earnings, huh? Yeah, that looks okay. So what I would try to do is, you see the little support zone right down here? I try to buy it down there. That's the bottom of this bar, 26.20. You closed at 27.14. If you can get anything down into the 26, 70, 80 area, that would be a good buy. Put your stop underneath there and just see if she rips. Now, long term, this thing looks like hell, right? If I go to the monthly, I mean, that's pretty ugly. So this thing's got a long way to go, and it's going to have resistance all the way up. But even on that monthly, you can see this thing could push quite a ways even to find resistance. So it looks like it's been given up for dead. I don't know what the short interest looks like in that either. If the short interest is really high, that makes it even more exciting. And the last one's EEM. Let's take a look at that one. And so this is the emerging markets. Blows away all the highs again. Same sort of thing, right? You go over them, volume expands. What is that? That's a bunch of stops being taken out. Now you're over the top. You get not really a doji. This one's going to carry a little bit more tomorrow, and I suspect it will come back in some after that. What will it do? It'll come back and do a retest regen on those highs. If you want to buy it, you just got to be patient now if you haven't bought, and get it as it comes back in. So your nice big bars it's going over, you can see them here on the weeklies. You can see this big bar on the way back. So 40, I doubt it's going to get under 40 again unless something major goes wrong. 40 is this area, right? So that's your swing point highs. That's where you have to look for it. It's roughly 43 now. Excuse me, 41 now. So, buck back in. That would be the place to try to grab it. That's 2.5%, and it can certainly move that. It's got a high beta. Okay, so we've been looking at these markets. We've been thinking about what they're gonna do. I've been telling you what I thought they were gonna do. I wrote another article this morning. If you have a chance, you might want to check it out. It's over here on TA Today. The risk isn't where you think it is. And essentially, I was talking about, modeling. You need to have a model. If you don't have a model, you're lost. And in this market, and in any market over time, you need a model that's tied to supply and demand. If you don't have one that's tied to supply and demand, you're going to get whipped around and not understand why. I know that there's all these technical tools out there, especially with the computers anymore. You got MACD that's running off moving averages, average convergence, divergence. You've got your oscillators. You've got so many things that are momentum driven. Well, they work at times. They don't work all the time. Folks, reading the tape always works. It always has worked, always will work. Tape reading is the oldest thing that's out there. Jesse Livermore used to read the tapes. I mean, what else did he do? There weren't no computers back then. Why was he so successful? Because he could visualize that chart in his mind as he read those numbers coming off the tape in those bucket shops. That's as close as you can get to what's really happening. If you want to stay in sync with the market, learn to read the tape. The neoclassical model is that. That's what it does. Looks at trend, looks at supply and demand, uses it for timing, uses trend for direction, and then, it's as simple. If you can count to 6, you can apply the model. It's not very hard. It's pretty simple stuff. It's hard to apply, but the basics, the concepts, they're simple. They're not hard. And that's what you want in a model. You don't want some complex model you can't understand. You want something that is logical, something that makes sense. If you haven't checked out my books, check them out. I talk about them. I've laid it all out here. Check out this article. It's a good article. Let me see here. Last question before I go. Are you playing for a full breakout here over the highs? Yeah, you're going to get a breakout. You're talking about the SPX, I assume. You're going to get a breakout more than likely, but you're going to get a pullback before then. It's not going to be deep. You're going to have to buy it if you want to buy, if you want to play. But yeah, I think the market's going to try to run higher. It's set up that way. Anything can happen. We'll have to read the tape day by day. I mean, that's what tape reading is. But right now, it's set up to try to push higher, yeah. But you're going to get a retrace. You're going to get a retest regen off your strong indexes, a pull back to the swing point highs on the weaker ones, and then you're going to see this thing regenerate, try to push. Have a great night, folks. I appreciate you being there. You tell a friend, tell two. As always, I'm L.A. Little, and this is and was your daily TA wrap. You have yourself a great night, and I'll take care of you. Good night.